Good evening. So, welcome to my YouTube channel. My name is Stanley. I am your host, your teacher, and your mentor. So, whichever one that suits you. Okay, so today we are going to be talking about market structure. Market structure. Okay, let me write it here. Market structure. So, what is market structure? Market structure simply means the activities of buyers and sellers in the market. So when when the buyers are in control of the market, so there is still a pattern which the market follows. When the sellers are in control of the market, there is a pattern that the market follows. When the buyers and sellers are struggling to take control of the market, there's still pattern that market forms. So this is what we call the structure. This structure is actually the activities of the buyers and sellers in the market. Okay, so if you come to market structure, we have three types of market structure. So in market structure, we have the uptrend, we have the downtrend, and have the consolidation. So this one we call it what? We call it consolidation. Consolidation. Okay, so this is called consolidation. So in uptrend is when the buyers are in control of the market. So when the market buyers are in control of the market moves upward. That is what we call uptrend. So as market is moving uptrend, it will be creating higher highs and higher lows. So this is a low, this is a higher high, this is a higher low. Why is this a higher low? Because it's higher than this low. This is a higher high. Why is it higher high? Because it's higher than this high. This is a lower low. This is a higher low. Why is it higher low? Because it's higher than this high. So in this situation, if market starts creating higher highs and higher lows, knows that the higher lows are the protected this place are the protected point swing points. So this is the protected swing point. So the market will no matter what, market will try to protect this point. So while protecting this point, it will this because why it's protecting this point is that this point sponsor the break of this high, so creating higher high and then higher low. So once the market is creating series of higher high, higher lows, higher high, higher lows, then know that the market is in uptrend. So when the market is in downtrend, the market will have a high, a lower low, a lower high, a lower low, a lower high, lower low, lower high, lower low. So why is this a lower low? Because this low is lower than the low that we cut off here. So let's say this is a low. This is a low lower than this low. That is lower low. This low is lower than this low, lower low. This high is lower than this high. This high is lower than this high. So that's why we call it lower low, lower high. Then this is lower low. This is lower high because it's lower than this high. So when the market is creating a series of lower low, lower high, lower low, lower high, lower low, lower high, they know that the market is in a downtrend. So in a situation where the market is creating this consolidation is when the buyers and sellers are struggling to who will take control of the market. So for some traders, they will call this place, this is a resistance, then this is a support level. So they will say that when the market comes to this support, you buy and take it, put your stop loss at the resistance. So in this situation, the market is consolidating. So as a trader, I would advise you to avoid this kind of market because you might be taken out at any time. You might place your buy at the support, targeting to buy at this resistance, targeting to sell at the resistance. Then the market will now go down and take you out from your position, and then maybe reverse to the resistance, or maybe continue going down. So in this consolidation, you will not know when the market is going to break out. So you have to be careful when trading consolidation. So this is everything about market structure. So in my other lecture tutorials, I'll be teaching you how the advanced market structure, and then break of structure, change of character, and then we'll go into demand and supply zone, premium and discount, so many things, point of interest, and then so many other things I need to know to be profitable in the market. I'll also introduce to you the strategy that I trade that have made me consistent trader, profitable trader. So as we go on, I will teach you everything I know, everything I've come across, everything that I know that have helped me in forex trading for the past close to 9 years. I started learning forex trading as of 2019. So from then till now, I will teach you everything I know, technical analysis, and then every other thing. I will also show you resources there where you can also learn more. So with this, I think we have come to the end of this lecture. So if there's any question, you drop your question in the comment section, and I will attend to it. And then don't forget to follow us, click the notification button, subscribe, click the notification button, so that when I create more videos like this, you'll be among the first to watch it and then learn, get a good value from the teachings, and your mentor and your friend. So today we're going to be talking about advanced market structure. So by now I believe that you have watched my previous video on market structure. So I've taught you that the market moves in series of higher high, higher lows, higher high, higher lows in an uptrend, and a series of lower lows and lower high in lower trend. So today we're talking about advanced market structure. So if you go to the market, you will not be seeing the market moving in the smooth direction as I said. So the market will be moving, will be creating structure. So especially if you move down to the lower time frames. So lower time frames delivers price to the higher time frame. So you might go to your chart, and you see that this high, this trend, which created this high, this low created this high. As market was moving from higher low, higher high, higher low, higher high in lower time frames, or even in the high time frames. So we seeing the straight line like this. So that is called, so the movement like this, what we call substructures in the market. So we call it substructure, which delivers price to the higher, to the high. So before the market start moving down. So as the market is moving down, it's buyers and sellers that are struggling in this direction. So buyers are trying to maintain the price to continue moving down, but the sellers said no. They continue moving it to reach up to this high, so that they can also buy. So the buyers have also moved it down here, so that they can also buy again at this lower level to move higher than this low. So taking out some sellers. So in this way, this small movement in the direction of the higher time frame or in the market is what we call substructure. So I think let's go to the market. Let's know if you can see something like that. So this is a 15 minutes higher time frame. So if you look at it this way, you will see that the market at this level. Okay, so this is a lower time frame, so let's start from here. So you see that the market is moving from a series of, this is low, high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Yes, this is lower than this, lower low. This is equal. Okay. So let's start from here. So you can see that the market, as the market was, if you move into this very well, you see that in this place, you see that the market was moving. You see this high, you see this low, you see it coming back here, you see this high come back, go. So as this movement up and down, sorry, up and down movement, this is higher high, higher low, is what we call substructure. So the market does not move so straight like as you think that it's going. So it creates lower highs, lower low. It creates a series of lower low, lower high in between, which means delivering price to the higher time frame. So this is moving high, moving low, high, low, high. So lower low, lower low, lower high, lower low, lower high. So in this direction, there you know that the market is moving bearish. So that is what that is the whole thing about advanced market structure, so that you will know how to draw your lower time frame. So if you see the way I draw it now, you see that for me to draw this, I have to locate the high here. Then I will locate the low that is lower than this low, which is this. Now locate the high that is lower than this high, which is this low, which is this high. Look at, I will then look for a low that is lower than this low, which is this. A high that is lower than this high, this. A low that is lower than this is this. Then you see why I did not choose here is that this place is not lower. It's not. This place is lower than this, but it is not. This place is higher than this. So I have to choose here. Choose this. So this is the substructure that delivers this price. So I can also choose that this price. I can also choose this to be this way. This to be this way, like this. Then this go like this here. So you can see it. So this is the, although this is lower low, but this low is lower than this low and this low. So because of this substructure, I will choose this, and then this, the market is still in the lower time frame. It is downtrend. No lower time frame, it's in downtrend. So this is what I mean by advanced market structure. So the next thing I'll be teaching you break of structure and then change of character. So after that we will talk about the order block and breaker block, and then fair value gap and all those things. Thank you for watching. So please, if you found this video valuable, please follow us, like and comment, so that others can watch it. Then also turn on the notification button if you're watching on YouTube. If you're watching on Facebook, you can comment, share to your friends that are also interested in learning forex, so that they can also learn from where you are learning. Thank you very much for watching today's tutorial.